Hello everyone, my name is John Locke and I'd like to welcome you to The Winning Trade. But first, the required disclaimer material. This presentation is given for educational purposes only. We're not broker-dealers or financial advisors and we're not making any specific trade recommendations. Also, please be aware that your risk in trading options is substantial and please make sure you are fully aware of all your risks prior to placing any trades. Also note, this presentation includes a hypothetical computer simulated trade and a result. The presentation is believed to be as accurately represented as possible, but keep in mind that live results can vary from simulated results for many, many different reasons. If this is your first experience with us, my name is John Locke. I'm a trading performance, wealth, and success coach with Locke in Your Success LLC, where myself and my mentors are here to help you win in the markets and in life as well. And today I'm here to take you into the realm of high probability options trading, also known as income trading. Now, an income trade is a strategy that utilizes options strategies to make money from the passage of time rather than depending on price movement alone in order to make money. This means we can often make money whether the price goes up, down, or sideways. Now, this doesn't mean we're going to make money all the time, but it does mean that we're much more likely to make money than we would be if we were being purely directional. Plus, this also allows us to trade non-subjectively if we'd like to do so. The trading strategy that I'd love to demonstrate for you today is called the V32. The V32 is a shorter-term, market-neutral, broken wing butterfly strategy that we trade on the Russell 2000 and that we track real-time on our options trading for income webinars that we have on Monday mornings within our Go membership. The trade requires a minimum of $3,500 to trade. The example size we're going to be covering today is going to be $35,000 planned capital. This strategy does not have a profit target, and it has an exit loss trigger of 7.1% of our planned capital, which in the case of our $35,000 demonstration trade is going to be $2,500. So let's jump right in and we'll take a look at the strategy. So this is a software that's called OptionNet Explorer, and in this software what we can do is really cool. We can go back in time and we can put trades on, or we can demonstrate trades as they happened in the past, which makes this a really great educational tool. Now, on the software, we have, this is our options strategy. This is the date that we're at. It's July 21st, 2021. These columns here show our options expiration cycles. We are looking at the August 20th, 2021 expiration cycle in the Russell 2000, and the top has our call options, the bottom has our put options. These are the strikes. This strategy is going to use put options, so we're selling, in this case, 20, 22, 10 put options. We're buying 10, 22, 50 put options. We're buying 10, 21, 50 options, and that gives us a profile that's known as a broken wing butterfly. If we take a look over here, this is our analytical graph, and our analytical graph shows us what our position risk is at any given price point in the Russell 2000. The price of the Russell 2000 is going to be along the bottom here, the asset price, and the value or profit and loss in the position, you can see the numbers here along the right, is represented by this dot. We have this curved line called a T+0 line. It shows us the software's projection of the estimated value or profit and loss in this position as of today at any given price level of the Russell 2000. So for example, right now we have the dot here, and this is down slightly as far as profit and loss because of execution costs on entry. But if the market were to go up to, or the Russell were to go up to 2,400, then you can see that the price here, or the estimated value, is going to be about $1,200 in this. And if it goes down a little bit, say to 2,200, you can see the estimated profit and loss, and this is going to be about negative $997. Over time, this T+0 line does change, and you can kind of estimate those changes by coming in here, and you can change this to say T+7 and you can see how the line raises a little bit here. That's because we're in a positive theta position, which gains value over time, meaning we don't necessarily have to have price movement in order to make money here. So let me go back to t plus 0. We also have our blue edge line, which is our expiration graph. This is the estimated value, or this is the exact value that this position will settle at when the Russell settles, assuming we let the options go that far, which sometimes we do and sometimes we don't do. So let's talk about adjustments here. This position is a slightly bullishly favored option strategy, so we're going to maintain a positive delta in this position, meaning our delta number, by the way, is down here. Delta is the amount of money this position is estimated to make with or lose with a $1 price movement in the asset. So this right now is positive 25 delta, meaning that if the asset price goes up $1, this profit and loss should raise $25 in value. Also, if it goes down $1, we should lose $25 in value. And that's what makes this a little bit a positive bias. We adjust this position to the upside, or we move or change the position if this position goes negative delta. We're going to maintain positive delta at all times. Also, if we end up getting a down move here, we do want to watch our downside risk, meaning that if our short strikes in this particular position come down under 22.10, if the asset price comes down under our short strikes, then we're going to roll this back and reset it. And that is pretty much how simple this adjustment strategy is. So we're going to start this trade 30 days to expiration, and let's run it through, and we'll show you how we did. So a question I often get is, what is the entry trigger for the strategy? What technical signals do you use? Well, you can use technical signals with the V32. In fact, we do that within our Pro membership. A lot of times, if we see certain indicators in the marketplace, we say, hey, this is a great time, a V32 trade, and we'll make an entry for a V32 because of a technical signal. In our Go membership, we track these completely non-subjectively, meaning we don't have any entry triggers or anything like that. We don't care what the asset price is. We don't care how much the market's moving around. We're just going to simply enter this 30 days to expiration. So here we are with 30 days to expiration. This is the very same V32 trading strategy that we covered real time in the Options Trading for Income webinar at that time. Okay, so we'll take a look at the price chart anyway. This is what our price chart looks like as of day of entry. So let's move forward. So what happens on the very first day? Well, the very first day we're in the strategy, we get a 31-point down move. Now when we get our down move, we want to see if the asset price is below the short strikes. So our short strikes are at 22.10, our asset price is at 22.02. That does trigger what we call a rollback in the strategy. So we usually don't get an adjustment the very first day, but that does happen from time to time. Another question I get too is, are we watching this all day? Are we sitting there waiting for the market to get under 22.10? And the answer is no. All the strategies we cover here in the Winning Trade are strategies that we essentially check one time a day. We have a checkpoint time, and our checkpoint time on the demonstration videos is 3:30 in the afternoon Eastern time, or about a half an hour before the market closes. We're just going to let the trade play out during the day, and if we come in here and we check it at 3:30 and our asset price is under our short strikes like it is today, we're going to make a change in the position. So here, what we're going to do is we're essentially going to reset the position. We're going to close this trade, yes, at a bit of a loss, and we're going to move it down to our initial entry position. Our initial entry position, which I did not discuss but we'll discuss now, is going to be with the short strikes 17 to 27 points under the money, and we're going to go into a 60-40 broken wing butterfly. So our asset price here is at 22.02. If you go 17 to 27 points below that, that's going to put us, our short strikes, our closest number is going to be 21.80. So we're going to close this off. We're going to open at 21.80, 22.20, 2120 broken wing butterfly. We're just going to let that happen here by unchecking this. And this is going to be our new position. So one of the things I absolutely love about this trade, which we'll experience today and is experienced very, very often in the marketplace, is we get a fairly significant down move in the market, and then we get what we call a V reversal, or a very hard or a very fast up move following that. One of the great things about this strategy is when we get those V reversals, it's very good for the strategy. In other words, it's generally going to win. Where some people come in, or some of our strategies and some other people's strategies you might see out there, are what they call flat delta strategies, where they're more neutral delta, so they're zero. The challenge with those strategies is they still draw down money when you come down, when you get this down move in the marketplace. But when you get that huge reversal, they also draw down money to the upside. And a lot of times, if you get a lot of price movement in the marketplace, those strategies are more likely to take a loss. Where this one here, when we get those V reversals, most of the time, or almost all the time, is going to end up as a winner with that reversal to the upside. So let's move on here. Get a bit of an up move the following day. Let's see, we're sitting here a little bit. A continued down move, so we get another 28 points down. Our asset price at our checkpoint time is 21.88. That's still above our 21.80 short strikes, so we're good. And then boom, there's our V reversal, 44-point up move in the Russell, which is really big. It's a pretty huge move. And if we take a look at our position, we're now up $430, and we're still positive delta, so no adjustments there. If we go to August 4th, well, the market actually didn't get a V reversal. We had that one big up day, and we kind of moved around in this area for the following few days. You can see that in the chart. Everything's going fine. We're up about $1,000, and you can see our asset price is pretty much where it was when we rolled back. So you can see the theta, or the time, helping us here, or the passage of time getting us positive profit and loss. Now we're up 35 points. Now we're up 1,580. If we come here to the 6th of August and we take a look at our position, we're up $2,500, which is probably about 8% or so of our planned capital number. Our delta here is -9. And as we were saying before, this is a positive delta position. We want to maintain positive delta. So our adjustment here is going to be to move this option here. There's some half of our 22.20 options down to 22.10, and that's what it looks like after the adjustment. This brings us to a positive 10 delta, so that's good. And this is our position after adjustment. So let's move this forward. So we move ahead 3 more days, and we shift negative delta again. Our profit and loss is $4,095. Again, this is a $35,000 planned capital position. That means that we're up over 10% now, and this is what we look like here. We're going to make another adjustment, and we're going to roll this back. Now, when our front wing starts getting shorter, we do have triggers to roll up our lower wing. So we're going to do something like this here with our lower wing. That's going to throw us to -12, which means that we have to be more aggressive with this adjustment here. And this is where we're going to move this. So let's uncheck this, and we'll clear our trades. This is going to be our new position. We're up $4,065. We're positive 9.32 delta. Now, as we're making these upside adjustments with this strategy, one of the things that happens is our rollback point changes. So if you remember, we started with a rollback point of 2180. Now that we've shortened the upper wing, our rollback points actually moved up to about 2195. So we're actually going to be making a downside adjustment right around this point here. Rather than all the way back at the short strikes. Okay, so let's move forward here. So we ended up getting a little bit of a down move today, but that down move also kicked our delta negative. So since this is a positive delta strategy, we're going to make another adjustment here. And it's going to be pretty much the same as we had before. We're going to shorten this upper wing. Shortening this upper wing again is going to, in this case, going to trigger a roll up. So this is going to be our adjustment, and this can be done in two orders, right? We could do a condor order here and then a vertical order to do the other 5 of our 2140, 2130 options. Let me do this and clear. This is going to be our new position. We're up 4760 on our planned capital of 35,000. And also note too, we have a planned capital of 35,000. When we talk about planned capital, we talk about the maximum amount we're willing to put into the strategy. Many times we're going to be well below that limit. For most of this trade, I think we were down in the $25,000 level or so, and right now we're all the way down to about $16,000 capital in the position, which is nice. It makes our effective return much, much higher than what we advertise here. So anyway, this is where we stand. Again, positive 5.5 delta, up 4760. We have now 8 days to expiration. As long as the trade goes well, we will hold this into expiration. If not, then we'll exit a little bit early. So we do have some exit triggers, which we're going to get exited here. So let's talk about that. Move forward a day. So now we're getting a bit of a down move here. We're still up $4,900, but we're all the way down to 2220. Now our adjustment trigger on this is actually going to be with our positioning the way it is actually going to be at 2200. So right now we're at 2222. We get to 2200 here, which is right about here. Then we're going to be making a downside adjustment. So let's see where this goes. All right, so we got another 15-point down move. Now we're up 56.85. We're still above our 2200 here. So we're going to let this go. If we go to Tuesday, we get a 27-point down move in the asset. That does beat up our profit and loss a bit here. Okay, so we had 5,600. We're now down to 2,310. We're well past an adjustment point, so our adjustment point is at 2,200. We're all the way down to 2,276. Again, we're not watching these positions during the day. We're just letting these play out, and we're looking at this at our checkpoint time. This does require a rollback. I want to put my short strike 17 to 27 points under the money. That's going to put me at, let's see, 2150 for my short strikes. So I'm going to roll back to 2150. Now, when we rolled back initially, we're going to go into that 60-40 broken wing butterfly. So this strike wouldn't be here. Or we're going to, when we model the rollback, I should say. So we're actually going to exit that previous butterfly and go directly into this one. But when we do the modeling to see where we're going to be, we're going to start with our 60-40 broken wing butterfly. And if we started with that, you'll notice, if we roll back to entry position, you'll notice that I have minus 96 delta. I can't have that on the strategy. So what I'm going to do is I'm going to make my normal upside adjustments until my position comes into range. And that's going to be rolling up the lower ones and rolling down the upper ones until we get a profile that fits our criteria. So right here, this is what this ends up being. It ends up being a 30-20 broken wing butterfly. You can see we're positive delta, and our adjustment point is if we hit negative delta, we're going to adjust this up. If we get underneath in this configuration, if we get underneath 2170 for the asset price, we're going to have to make another rollback. So let's take a look here what happens the following day. So we got a down move the following day, and even though we got a down move, though, we actually went negative delta with the position. You see we're negative 2090. So we're due for an adjustment. Now when we make this adjustment, we're going to be rolling back these upper wings. Or making it smaller. When I make this smaller, what happens with the strategy, so say I did this adjustment here. When I make this smaller, what happens is it takes our adjustment point from 2170 up to 2180. Because of that, I have to make a downside adjustment here. And when I make my downside adjustment, I have to be 17 to 27 points under the money. That means that our short strikes are going to move to 2150. Well, our short strikes are already at 2150, meaning that I can't stay in this position and still be within the guidelines. That being the case, I have to exit the position here. So that's going to trigger an exit in the position, an early exit, or an exit that's a day early. So here we are, 2 days to expiration, and that's going to pop us out of this position. So model, enter closing model position. That's going to pull this out of our position at $3,340, which is a little under 10% of our planned capital of $35,000. This is not the $5,000 or $6,000 that we initially started with, but sometimes that happens from time to time. Sometimes we get up a lot of money and then we lose a little bit of that if we get some large unexpected moves in the marketplace. Regardless, though, still a very good return for this month's winning trade, the V32. If you like what you see, I encourage you to come over to thewinningtrade.com. That's thewinningtrade.com, and discover how you too can follow along with this and many other great strategies during our options trading for income webinars that we have on Monday morning that we hold for our Go membership. Also, at thewinningtrade.com, you can learn about upcoming winning trade presentations and explore past winning trades and receive access to free bonus material as well as our trading success blueprint. Yes, the very same blueprint that we use to help our traders become exceptional market neutral options traders. Also, while you're there, feel free to check out our Trading Performance podcast, where you can get information that'll help you skyrocket your trading results. And as always, if you have any questions, comments, or anything else you'd like to see on the next winning trade, please contact us. And you can do that by simply putting a comment in the video below, and we can answer your questions for you personally. Thank you for joining me, and I look forward to seeing you on the next winning trade.